Valterra Platinum has reported an 81% plunge in half-year profit. That's as the miner had to contend with lower output after flooding at Mandelbult due to heavy rains caused production losses. Costs associated with the group's demerger from Anglo American also weighed. Nevertheless, an interim dividend has been declared. Shareholders will receive R2 per share. That is, however, a 79% reduction on the payout made a year earlier. Increased tariffs on exports to the US are looming. America will impose a 30% tariff hike on South African imports come Friday. And in response to this, the Citrus Growers Association of Southern Africa has appealed to President Cyril Ramaphosa to intervene. A letter to the head of state says that hundreds of thousands of cartons of citrus are ready in pack houses to be shipped to the US over the next few weeks. But the implementation of the new tariff will mean most of this fruit will be left unsold. And this will have devastating consequences for rural communities in the Northern and Western Cape. ActionSA has introduced the Constitution 22nd Amendment Bill, which, if passed, will see the removal of all current deputy ministers. The party says this will save the country more than R1 billion per annum and align cabinet spending with economic conditions. The organization added that the move will also strengthen fiscal discipline and restore public confidence in executive accountability. The bill is currently under consideration by the Portfolio Committee on Justice and Constitutional Development. The state will give Transnet an additional R94.8 billion guarantee facility. This will be used to support the ailing government-owned logistics firm's recovery plan. The facility comes on top of a R51 billion guarantee the state announced for the company in May. Transnet has failed to deliver reliable freight, rail and port services due to equipment shortages and maintenance backlogs after years of underinvestment. But its 5-year turnaround strategy aims to restore freight rail volumes to 250 million metric tons per year. Further afield, Tesla CEO Elon Musk said the US automaker had signed a $16.5 billion deal to source chips from Samsung Electronics, a move expected to bolster the South Korean tech giant's loss-making contract manufacturing business. Here's more detail in this report.
Samsung Electronics shares jumped Monday on news of a big deal to make chips for Tesla. Elon Musk says his EV firm has signed a $16.5 billion contract for the supply of semiconductors. That should be a big boost for Samsung's loss-making contract chip-making business. Shares in the firm were up early afternoon following the news. Musk said a new Samsung facility in the US would be dedicated to production of the chips. That could refer to a planned plant in Taylor, Texas, which has faced delays amid the South Korean firm's struggles to win and retain big customers. Musk said the plant was conveniently located near his house, and he would personally inspect it to help accelerate progress. It's all very timely for Samsung, which has dropped behind competitors in the race to supply AI chips. Local rival SK Hynix and Taiwan giant TSMC are both seen to have streaked ahead. That has weighed heavily on Samsung's profits and share price. Analysts say the deal could also be helpful for South Korea as it battles to clinch a trade deal with the US. The country is seeking partnerships on chips and shipbuilding as part of talks to avert a potential 25% tariff.
And Dutch brewer Heineken welcomed a trade deal between the European Union and the United States and said that it is weighing all options to deal with growing tariff challenges in the long term, including shifting manufacturing.
Heineken welcomed an EU-US trade as it kept its annual guidance, although the world's number 2 brewer further said it was weighing up its options long-term over growing tariff challenges. This includes shifting manufacturing, as the Dutch firm exports its beer brands to the US from Mexico and Europe. Nevertheless, it reported a forecast-beating 7.4% increase in organic operating profit in the first half. The major global brewer credited growth in once difficult regions like Africa and Asia, as well as cost savings. Heineken also continues to expect annual profit growth of between 4% and 8%. Its CEO welcomed the certainty brought by the EU-US trade deal, which reduced a potential 30% US tariff on EU goods to 15%, a rate that would still hit Heineken's US profits. However, the brewer still faces US tariffs of up to 30% on its Mexican-produced goods. That's unless the two countries strike a deal before the August 1st deadline. Shares dropped in early trade.